Well, good morning, everybody. We are about to get going here in just a minute or so. We'll allow a few more people to join. All right. Well, I am glad everybody could come to our webinar today on captive insurance. I think you're going to learn something that you haven't learned before. I love captive insurance. Just to tell you a little bit kind of about who we are, I'm Ken Huffman. I started with a Big Four accounting firm, KPMG. And then I went to go work for a small CPA firm. And one thing I noticed was that there were tax strategies that we were not using with our current clients. And so I started a firm that gathered all those tax strategies and provided those to other CPAs. And one of them that became really popular that we had the most interest in is captive insurance. And so we're going to talk about that today. What we do is we create and manage captive insurance companies. So the business owner does not have to mess with all the management of a captive insurance company. We handle that all along the way. If you have questions during our webinar, you can type them into our chat feature, and then we will answer them as we go along or at the end. So feel free to type anything. We would love to answer it as we go along. So I'm going to give you kind of a brief overview of what captive insurance is in 90 seconds. So get your timers out. Let's see if we can do it. So here it is. So a business owner creates their business, okay? They have risk. And so they can form a captive insurance company. It's going to only cover that particular business that they own. You're not selling any insurance to anyone else. Now, this business is going to have all kind of different risk. And so the captive is going to write insurance policies for this business. Like any other insurance, you're going to write a premium check. The business writes a premium check to the captive insurance company. In exchange, it gets all those insurance policies to cover those risks. Now, you have cash over here that covered those premiums. We don't want to hold all the risk. And so we reinsure that through reinsurance, so that if something does happen, we pull from the reinsurance and not directly from our captive. So you have cash in here. What do you want to do? You just don't want to sit there. So you can invest those premiums to earn additional income. So you get the coverage, you get the reinsurance. So it's a great way to protect the business that the business owner built for so many years. So that's captives in 90 seconds. All right, we'll go into more details as we go along, but that kind of gives you an idea of kind of the structure and how it works. So captives are not new. These have been around since the 1950s. Most of your Fortune 500 companies utilize them. They've done that for many, many years. So what is captive insurance? It's a private insurance company owned by the business owner. All right. It is a premier business strategy in and of itself, but it is the best risk management tool available to business owners today. It really is. And it's important to remember too that this is not a product. This is not an insurance product. This is an insurance company. All right. So who's it for? It works for any company that has gross revenues of 2 million to 2 billion. So there's a big range. Okay, there's a big range. It can work for if you have less gross revenue. Now, I'm not talking 2 million of net income. I'm talking about total sales of all the businesses that that business owner has. Does it add up to 2 million? If it does, it's something they need to look into. What type of business can benefit from a captive? Any type of business. Why? Every business has risk. It doesn't matter what business you're in. So physicians, manufacturers, construction, healthcare, oil and gas, every business has risk. And so it's something that you want to look into to see, is this a good fit for them? Is this something that would be helpful to them? So what does captive insurance do? There's really 3 benefits, okay? It's going to protect the business, it's going to decrease taxes, and it's going to build wealth. And we'll look at each one of those. So protect the business that you've built. Look, business owners, they take 20, 30 years to build their business, right? They build it up. They want to protect what they built. And a captive is a great way to do that. You're not replacing your commercial insurance, okay? It integrates with your commercial insurance, all right? So that's very important to remember. Okay, and you're like, well, how much more insurance do, if I have a commercial insurance? Well, take a look at your insurance policy. When it comes, you got like 1 page of the things that they do cover and 300 pages of what they do not cover, the gaps, the exclusions, and things like that. Let's take a look at this. Let's see here. Let me get my little laser pointer going here. Here we go. So your current commercial insurance covers a small piece of that pie. You have all these gaps, exclusions, deductibles, and other business risks you're not covering. Those are the things that a captive insurance would cover. It's those things that they would cover. Let's get into the particulars. So here's some of the top insured risk, all right? Business interruption. Has there been any business interruption lately? Oh, yes, there's been plenty, right? I mean, you've got riots, you've got stores being broken, all kind of things, right? So things happen. You have supplier interruption, because of, here's one, coronavirus. That's a big one, right? That has affected all kind of businesses. Businesses have been closed, restaurants. Let's say they bring in $500,000 a month and they're forced to close for 2 months. They could get a check for $1 million if they had a captive insurance company to cover that revenue that they lost. Commercial gaps and exclusions, deductible reimbursements. Cyber risk, data loss. How many times have you heard people say, I got hit with ransomware, right? It's on the news all the time. And so if you had a captive insurance policy to cover that, it's not going to hurt you near as bad. Employment practice liability, that's a big one. Loss of a key client. A lot of businesses, they may have 3 clients that bring in 80% of their revenue. Well, if you lost one of those, that would hurt, wouldn't it? Yeah, it'd hurt. So you can get a policy that will replace that income if they decide to either go out of business or they go to your competitor. So you see how it's a huge thing for business to help your business if you have these. Loss of a key employee. Maybe you have a salesperson that brings in 60% of your revenue and you're worried they're going to jump ship and go to the competition. Ensure that they don't, right? If they do, then you'll get a check to cover what they would have brought in. Loss of a key supplier. Maybe you've been doing business with this supplier for 20 years and you make chairs and the leather, you get it for half off what you normally would because you've got a great relationship with the supplier. But if they go out of business, your competition costs double. Well, you could get a check to cover that difference between your old cost and your new cost. So you see how that's extremely helpful. These are things that your traditional commercial insurance is not covering. All right. These are things that are either, if they do cover, it's too expensive, right? You just couldn't afford it. Or it's just commercially not available, right? So this is custom insurance built for your particular business. Product warranty and insurance, we're going to talk more about that later, but that is reason alone to do a captive, and we'll talk about that. Regulatory change. There's been all kind of regulatory change, hasn't there, recently with COVID-19. So people have additional costs, right? PPP equipment. You have to cover that some way. Well, if you had an insurance policy, it would cover all those additional costs. Rental income replacement. This is a really big one. if you have commercial real estate and somebody is renting a place from you and all of a sudden they decide to jump ship and leave in the middle of their lease, most of the time you're out of luck, right? Well, with this, you can get up to 6 months of rental replacement income for them. Well, that's huge, right? So that helps keep a business healthy by having this. So let's look at this. Okay, a case study, regulatory change. So we had a client last year, they're a Medicare provider, and they provided a service to nursing homes, and they would get paid for 20 days a month for each client that they have. And they called us up and they said, look, I don't know how many policies I'm going to be able to purchase this year, put into my captive, because there's been this change. Now we're only getting paid for 4 days, not 20. And we're like, file a claim. That's the whole point of having a captive insurance company, is for insurance. And so they were able to file a claim because there's been a regulatory change. They went from being able to get paid 20 days a year to 4 days a year. And so they were able to get a check for $1.5 million. So that was helpful. So it helps your business in a big way. Protect the business. So another thing, this is creditor proof. The corporation is creditor proof. You're creating a new corporation when you have a captive insurance company. How does that help? Well, one day you may sell off your business, right? Well, guess what does not go with the business? The captive insurance company. So you put in $500,000 a year. After 10 years, you got $5 million. You sell your business. You have $5 million in a captive. And I'll tell you what you can do with that later on. But so it's also creditor proof. Let's say something goes haywire with your business and things really go south. People cannot get to your captive insurance company. It's creditor proof. Why? It's a state licensed insurance company. And so there's protections there. You can't liquidate that because the money that is there to pay for claims on your business. So it's a great thing. It really is. It's a very powerful business strategy. Now, another thing that it does, it decreases taxes. Now, this is not the primary reason why you would do a captive insurance companies. People love this. Business owners love this aspect of it. CPAs love this aspect of it. The primary reason why you would do a captive insurance company is for the insurance, okay? Now, how does the taxes work? It works very well, all right? So what you have is it's tax deductible for the business, but it's also tax-free income to the captive. The Journal of Accountancy came out with an article not too long ago kind of talking about this, and it talks about how it's tax deductible as a business, but the premiums are non-taxable under the 831B exemption. So you get up to 2.3 for a small captive. You can deduct up to $2.3 million per year of premium in your captive insurance company. So you could deduct it from your regular business, okay? So let's just say you had $1 million, wouldn't that be great? $1 million profit, right? And you're an S Corp. Okay, if you don't have a captive, you're going to be writing a check to the government for around $400,000. If you had a captive insurance company, you could have policies. If they added up to $1 million, the $1 million goes into your captive. Over here, it's premium income, but it's non-taxable because you get that 831B exemption. So again, that is a nice feature. Let's look at a quick illustration of this. You know, you have income $500,000. If your insurance premiums were $500,000, your taxable income for your business would then be zero. If those insurance premiums went into a captive, you would have premium income of $500,000, but you get that exemption, the 831B exemption. So your taxable income for the captive would be zero at that point. Case study, this happened actually about 6 months ago. This particular business, construction company, they had a great year, and they ended up having around $1 million left over at the end of the year of net profit. And so their thought was, I was in the room with the investment advisor and the CPA, and we were talking about things. And so the business owner gave the money to the investment advisor, upon which we talked about you're going to write a check for $400,000, you know, and so you'll have $600,000 to invest. And then we talked about the captive insurance company, what it could do for the business, all the protections that it could provide, and that $1 million would be tax exempt income, and then you could invest it. That business owner looked at the investment advisor and was like, give me back my $1 million. We're going to do the captive insurance company, and then I'll give you the money to invest and earn even more. So it worked out well. He got it because he said, I'm going to immediately get a 40% return on my money. And he's right, because you're not having to pay those ordinary income taxes. Now, you do pay taxes. Okay, you're deferring taxes, but it's at a lower rate. Okay, so you're only paying capital gains rates when you take money out of the captive. And that's what a lot of people want to find out. Okay, it's great, I can put money in, but how do I get it out? Well, you get it out by taking qualified dividends. And I like to describe it, live, quit, or die. Either way, you're a winner. But you know, dying is not a great way to do. But if you live, you can have your captive, have it up and going, and it's protecting your business, you're decreasing taxes, you're building wealth. And then starting in about year 2, you can start pulling out, and this is just kind of an estimate, right? About 20% of your premium, all right, that you have been putting in. And you will pay capital gains rates on that, all right? Now, when you pull the money out, you can do whatever you want to do with it, all right? You can buy a boat, you can buy a house, whatever, because you've pulled it out and you've paid those taxes. You can have a captive for 5 years and be like, okay, I don't want to do it anymore. What we would do is relinquish the insurance license, and then that captive insurance company, it just becomes a regular C Corp, upon which you could go buy buildings, invest in, you know, apartments, whatever you want to do. Or you could liquidate it and again, pay capital gains rates. Or the third option is that you could die. If you happen to die with your captive, let's say there's 10 million in there. If you liquidate it all, you would pay 2 million capital gains. But if you had it and you didn't liquidate it, you happen to die, then your heirs, your kids, would then get all $10 million because they get a stepped up basis. So they're not going to pay any capital gains rate. So that's not bad. The third thing that a captive does is that it builds wealth. Now think about this. When people think of insurance, they think it's just as an expense, and it's not. This is a business strategy, because when I write a check, I'm going to see that money again. It's kind of like how many times has State Farm ever sent back all your premiums saying, you know, John, you never got into a wreck this year. It's great. We're going to send you back all your insurance premiums. It never happens, right? But with the captive, that's exactly what happens. So you get to retain those premiums. You can invest them, and they're all reinsured. That's part of the risk distribution process. But anything that happens, if I file a claim, I'm going to be able to reinsure that. And so if something happens, I pull from the reinsurance. Now, I reduce my traditional commercial insurance costs. Let's look at a case study on that. This is a different construction company several years back. All their premiums, the general liability, the workers' comp, the commercial auto, all that added up to $2.5 million per year. This was a good size insurance or construction company. We started a captive insurance company for them. We increased their deductible because if we needed to, we could pull it out of the captive. It drove down their premiums. So they have an inverse relationship to the tune of, it saved them $1 million. That's real savings. That's money in your pocket. That makes a business healthier. So they got more coverage for less money. That's a powerful business strategy. So it reduces your commercial insurance costs. Here's another great thing about captives, and it's really reason alone to do it. There's a warranty and insurance program. Now, have you ever gone to Best Buy and bought a TV? What's the last thing that they ask you right before you check out? Do you want a warranty? Do you want to extend a warranty? And you're like, well, it's only 5% of the cost. Okay, I'll go ahead and do it. That's a captive insurance company. And if you have clients that manufacture anything, They can do the exact same thing. They can create a warranty on any product that they have. They can either charge for it and make additional revenue, which the warranty, the income goes directly into the captive with a tax rate of 0. That's nice. Or they don't have to charge for it. They can embed it into the product. So it's a huge competitive advantage. Let me give you an example. A commercial range company, they came to us and they said, I like, everybody in our, when I'm saying commercial range, I mean what they cook on a cooktop for restaurants. They're expensive. And everybody in the industry offers a 1-year warranty. And so they came to us, hey, can we do a 2-year warranty? Is there a way we can create a 2-year warranty? Sure. They didn't charge for it. But boy, did it pay off. Their sales skyrocketed because people are thinking, look, if I'm going to throw down all this money for a commercial range, I want it to work for at least 2 years, not 1. And so that was a great competitive advantage. And they're doing great and well today because they made that change. So again, it's custom. Maybe you want a 2-year warranty, a 5-year warranty, 10-year warranty. You can charge for it. Rental insurance for apartments is great if you have people that own apartments, or create any kind of warranty. If you look at kind of an example of kind of how this works, if you, without a captive, and we're using $1 million example just because it's round numbers, you do not have to put $1 million into a captive, okay? You can put $100,000 into a captive. You could put, we got clients that put 100,000, we got clients that put in 10 million. All right, so it's a huge range that you can put in. Some years you may have a rough year and you're like, I can't put anything. Okay, don't put anything in. All right, other years you could go up to your actuarial limit. So let's say you have a business income of $1 million, just for round figures. If you're in the highest tax bracket, you're going to write a check for $400,000 to the IRS. You have $600,000 left. Or if you have policies, you could put, you've got risk in your business. The $1 million goes into captive. That's like probably $10–20 million worth of insurance coverage for that $1 million. You are going to have management and operating expenses. These have to be audited every year. You have to have an actuarial look at it every year. There's premium taxes. There's different costs to operate. Then you're also going to have some claims. It is an insurance company, and so you will have some claims. You may file some yourself, or some may come through the reinsurance. And then also, but you've also got investment income, right? Remember, we're not going to just have that $1 million sitting in a bank account. You could invest that money, so you'll earn on that. You end up with $980. So you have a net gain of $380,000. Even if you never file a claim, you still end up financially ahead in this situation. So powerful strategy. You do that over 10 years. You can see, well, if you didn't do anything, you would have 6 million. Again, unprotected. Anybody could get to that. Or you would have 12 million in your captive if you did $1 million a year. And it's protected and investable. Remember, people cannot get to your licensed insurance company. And you save a significant amount of taxes. Again, it's not the primary reason why you do it, but it is a nice advantage. Offshore versus onshore. Stay away from the offshore. Don't go there. All right. There's been problems with that. All the captives that we set up, we do right here in the good old USA. It's very important that you have a good captive manager to make sure they are in compliance with all your state and federal guidelines. Clean captive checklist. We make sure that everything that we do goes through a process to make sure everything is done properly. Very important when you're talking to captive insurance to do exactly that. Formation process. It's feasibility study. We do that at no cost to you. You know, if you're thinking, oh, I've got a client, they have this business, you know, we do a quick, it's just a 1-page, fill out 1 page, and we're going to send you something to see if, does that make sense for them? We want it to make sense for the client. If it does, they like that, we then do a third-party independent underwriter to look at your business, and they will see how much risk do you have on your business, what policies would apply to you. At that point, the business owner can choose what policies that they want. We then form the captive insurance company for the business owner, and then we manage the captive insurance company for the business owner. Why choose a captive? Remember this graph up here? You have a lot of things that you're probably self-insuring on, just hoping, I hope nothing happens like that, right? Well, why hope? I mean, you might as well ensure that that doesn't happen, because there's a lot of things you're not covered for. But if you have a captive insurance company, you are covered for that. Your business has all this captive coverage, business interruption, commercial gaps and exclusion, coronavirus, the list goes on. So I'm protecting my business, I'm decreasing taxes, and I'm building the wealth of the business owner. That's what a captive insurance company does. There's all kind of case law to back this up. Again, these things are not new. They've been around for a long time. And if you have a client in mind, let us run a complimentary feasibility study. So let's see, do we have any questions that came through? Okay, yeah. If anybody wants a copy of these slides, all right, happy to give those to you. And happy to go over it in more detail, or if you have questions, feel free to give me a call. Phone number's right there, 888-944-5588, or email me, however you want to contact me. Happy to visit more about it with you. So anybody that wants some slides, just email me, and we will be sure to get those out to you. Thanks again for joining us today for our Captive 101, why every business owner should have a captive. I enjoyed it. Feel free to contact me. Thank you.